I do wonder, though, we say this almost every time we talk to you. How different is this time around? Is this different from what's been in the past, or is this banking turmoil that we're seeing right now about as different, or just more of the same, like Chair Powell seemed to suggest, that is being ring-fenced already?
Well, it's different in the sense that it's the smaller banks. It's the regional banks now that are under stress, not the too big to fail banks, the biggest banks. That's different than what we experienced in 2008. And, they are smaller and to some degree have fewer resources to defend themselves. So I think it's worrisome that we've got this PacWest information that came out after the press conference and after the markets closed. It just looks like the markets are moving from one bank to another, and the vulnerable deer in the herd are being picked off. I have to say I worry about this, but I would like to believe that Jay Powell has information that suggests that the situation is contained or containable.
In this environment, does that make sense that the Fed actually took rate cuts off the table?
The focus is on inflation. They're trying very hard to separate financial stability concerns, banking system concerns from monetary policy. Inflation does call for continuing rate increase singular, perhaps a pause in June. But, we'll see if conditions force them to begin to combine financial stability concerns with monetary policy decisions. As of today, they did not do that, and they don't appear to believe they have to do that.
Dennis, we spoke to Rob Kaplan yesterday, and he was talking about this idea of a preference for a hawkish pause. Even though we didn't get that today, would you see this as being a dovish hike, I guess, and the nuances of communications, do they become more important than ever going forward?
Well, I think the messaging is very important. As I read the statement, I thought that was, on balance, dovish. If you want to call dovish that they actually were more suggestive that they consider a pause. They took the key language of further firming out of the statement. And so I saw that as suggesting a pause might come in June, or at least that could be on the table in June. At the same time, Chairman Powell emphasized that they didn't intend to cut rates anytime soon, that that kind of decision would not likely be appropriate given the stickiness of inflation. So, how you net out those two depends on individual interpretation. But longer term, it's a hawkish position I think he took today.
There was a question when we saw the surprise hike from the RBA as well as to whether central banks are trying to move quickly before this so-called window of opportunity for hiking is over. Do you believe that window exists? Should policymakers be looking at it in that way? And does that heighten potentially the risk of policy error as well?
I'm not sure I buy the argument that there's some kind of a narrow window of opportunity here. If the data come in poor or discouraging in terms of inflation, and a big if the stress in the banking system really settles down, you cannot rule out that the Fed will continue to move against inflation with rate hikes. You just can't rule that out. So one of the things that I thought Chairman Powell emphasized today is it is truly meeting by meeting. It is truly a data-dependent decision-making process. And if the data go badly, well, then we're going to see further rate hikes, it seems to me. And I'm not sure I buy the window of opportunity argument.